Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 290 on September the 28th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on WW International, AT&T Inc., and Chewy Inc. And we discussed three new trades on Nikola Corporation, Southwest Airlines, and Target. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options or simply get better at how they're already trading options, we have launched the Weekly Option membership group. The group features video training that can be accessed online when it works best for your schedule, daily interaction with me and others in the group through a group chat, and ongoing videos and webinars to make sure everyone is up to speed and gets the help they need to get better at trading options. This is a community of option traders that can support you in your growth. The offer for access to the founding member price will be closing in the next few days, so email me immediately if you want to learn more about becoming part of this exclusive group. Today, the show is being recorded on Thursday evening, September 28th, 2023. I usually record the show on Friday, so today's prices will use end-of-day pricing on Thursday. So the markets were lower through Thursday's close. The Dow Jones Industrial Average was down 297 points, closing at 33,666 points. The S&P 500 index was down 20 points, ending on Thursday at 4,299 points. And now it's time for the topic of the week. The topic of the week is trading options for income. Specifically, I have a question for you. Which one is better, buying spreads or selling spreads to create income? Many people will swear up and down that selling spreads is the best way to create income trading options. I have proof that you can make great income buying spreads as well. From my viewpoint, whether you buy a spread or sell a spread is less relevant. Take the side that goes with the trend. If the longer trend in the market is pushing price higher, then I'll look to buy call spreads and sell put spreads. If the trend is heading lower, then I'll look to buy put spreads and sell call spreads. Whether I buy a spread for 65 cents or sell a spread at 35 cents is less relevant to me. Sometimes it comes down to choosing which one is the best use of your capital. If I sell a $1 wide spread at 35 cents, then my brokerage will hold the full dollar to protect themselves against any risk of loss. If I pay 65 cents for the spread, the brokerage doesn't hold any additional capital to cover my risk. All I can actually lose is the 65 cents. If you have a smaller account, you might need to learn to buy spreads to start creating additional income. Once your capital grows, you'll have access to other strategies like selling iron condors. Don't let the size of your account keep you out of the market. The truth is, I would rather someone learn on a small account rather than start with a larger account and lose more money simply because they had more money to lose. So don't let anyone tell you that selling spreads is the only way to create income trading options. You can create income buying spreads as well. Just make sure that you always understand the risk of any trading strategy that you decide to execute. So that's it for the topic of the week. Let's get into the review of last week's trades. And once again, I'm going to reiterate that this is through Thursday's closing price. So we start off with the covered call, looking at WW International, symbol W as in whiskey, W as in whiskey. At the time, the stock was trading for $9.98 per share. I looked at buying stock for $9.98 and selling the October 10-half call at 85 cents, hoping for a return of 13.73% in 4 weeks. Well, shares of WW International grew 85 cents, closing on Thursday at $10.83 per share. The call spread that we sold gained 30 cents, leaving us with a net gain of 55 cents if we were to close the trade out immediately. Now, with share prices above our call strike, we stand to earn more than twice that amount by holding onto the shares through expiration. So this trade is working out. No adjustments are needed at this point. Next up, we have the credit spread. We looked at AT&T Inc., symbol T as in Tango. At the time, the stock was trading for $15.13 per share. I looked at selling the October 14.5 put spread at 19 cents, which could give us a maximum possible loss of 31 cents per spread. Well, AT&T stock lost 12 cents, closing at $15.01 per share on Thursday. The out-of-the-money put spread that we sold is still out of the money, but only by a penny. With the put spread having added 8 cents of value, we can consider making an adjustment to increase the likelihood of making a profit on this trade. Now, you could look to sell the 15.5-16 call spread to create an iron condor, but that would only add another 8 cents of premium, and it increases our total amount collected to 27 cents. It would also give us a super narrow 50-cent wide profit range in the stock. I'm not a fan of making that trade this narrow with 3 weeks left, so I definitely lean towards holding off before I create the iron condor. Keep an eye on the stock price and the value of those call spreads altogether. If we were collecting more money for the sale of those call spreads, I'd be a little more tempted to make the adjustment. As is, I'm comfortable waiting. Finally, we have the debit spread on Chewy Inc., symbol C as in Charlie, H as in Hotel, W as in Whiskey, Y as in Yankee. At the time, the stock was trading for $18.15 per share. I looked at buying the October 19 18.5 put spread for 33 cents, which could give us a maximum gain of 17 cents, or that would be a 51.52% return in 4 weeks. Chewy shares gained 11 cents, closing on Thursday at $18.26 per share. The in-the-money put spread that we bought is still in the money. Even though the price has moved slightly against us, the break-even point has not been breached, so no adjustments are needed so far. As long as the shares expire for less than $18.50 in three weeks, we'll make our full profit on this trade. So no adjustments are needed so far. That's it for the trading review from last week. Of course, all new trades on today's podcast will use the October 20th expiration for monthly options in October. We'll start off with the covered call, looking at Nikola Corporation, symbol N as in November, K as in Kilo, L as in Lima, A as in Alpha. The stock ended the week at $1.65 per share. I'm looking at buying stock and selling the October 2 call at 11 cents, which could give us a 27.88% return in 3 weeks. Now you enter this trade by buying stock for $1.65 and selling the October 2 call at 11 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price is $1.54 per share, and in real terms, the stock purchase would require $165 and you'll collect $11 for selling the option. Next, we have the credit spread on Southwest Airlines, symbol L as in Lima, U as in Uniform, V as in Victor. The stock ended the week at $27.21 per share. I'm looking at selling the October 27.5 28 call spread at 19 cents, which could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the October 27.5 call at 81 cents and concurrently buying the October 28 call for 62 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire below $27.50 per share. The break-even price on this trade is $27.69 per share, and in real terms, you'll collect $19 per spread that you sell and have $31 at risk. And then our final trade on the week is a debit spread on Target, symbol T as in Tango, G as in Golf, T as in Tango. The stock ended the week at $109.57 per share, and I'm looking at buying the October 111-110 put spread for 65 cents, which could give us a maximum gain of 35 cents or That's a 53.85% return in 3 weeks. Now you enter this trade by buying the October 111 put for $3.80 and concurrently selling the October 110 put at $3.15. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire below $110 per share. The break-even price is $110.35, and in real terms, you'll pay 65 cents to enter the spread, and your maximum gain is 35 cents per spread. So that's it for this week's show. I did say at the end of the week in a couple of these descriptions, that's just out of habit. Remember, this show is using end-of-day pricing on Thursday, September 28th. So for those of you that are keeping track, use the pricing, the end-of-day pricing for that. I hope you guys have a great weekend. I'm recording the show a day early to celebrate a friend's bachelor party. I'm flying from Texas all the way up to Canada this weekend. So I would tell you where, but I don't want you guys keeping an eye out for me. But it should be a good weekend. And, some of these guys are traders as well. So we're going to have a couple of good conversations. I know, talking options, talking crypto, talking all sorts of stuff. So it'll be a great weekend. I hope you have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.